Time now for the markets with Leighton, and we've rolled around to the April supply-demand reports now.
That's right, Artist. Wednesday was the big report day and will be the kickoff for this segment. In the markets this week, U.S. corn ending stocks are increased from March. Cotton stocks are unchanged from a month ago, and there's optimism in some quarters that meat demand will pick up. We begin with some analysis of that April 10th crop and supply demand report from the USDA. U.S. corn ending stocks were bumped up by 125 million bushels, while soybeans were basically unchanged from March. For the bigger picture on what these numbers mean for the market, I talked with Extension Ag economist Brian Williams Thursday. Brian, how did the USDA explain this change in corn stocks from the March report?
Well, in the March report, we were expecting kind of some big changes in the world ag supply and demand report, but it wasn't as big as expected. We had our ending stocks were up about 135 million bushels. Most of that was because of a reduction in our feed and residual use.
What has been the corn market's reaction so far in, what, about 24 hours now since those numbers came in?
Initially, there was a big reaction, but it kind of cooled off fairly quickly. And yesterday, the corn finished up 4 cents. And at my last check on Thursday here around midday, it was up again 4 cents today.
So settled back after an initial burst of volatility, I guess we could say.
Yeah.
Longer term, do you think there'll be any big impact of these numbers? Are we kind of settled back to where you think we may be for a while?
Well, looking at the report, our stocks to use ratio went up a little bit from last month to about 6.8%, which would be bullish for the market. It shows that there's still some tight supply or tight supplies in the market, but we're also kind of looking into the planting here in Mississippi. It's underway, as well as the rest of the South, and there's kind of some delays up in the Midwest with snowstorms and cooler than normal temperatures, so that's something we really need to watch.
Right. Well, let's talk about soybeans a minute or so here. Now, as far as soybeans, we're still, I assume, in a very tight situation, and this report kind of confirmed that?
They are as well. The report, there was really no surprises with the soybeans. The ending stocks were unchanged. We saw a little bit of movement around with the crush and exports both being revised up a little bit, but that was offset by the decrease in the residual use in soybeans.
Did prices change a whole lot as far as in the aftermath of the numbers?
They didn't. They closed down 2 cents yesterday. I think a lot of that was more of a reaction to an increase in world supply rather than domestic.
For cotton, the story in those April 10th numbers, as we said at the top, was no change in ending stocks. Early Wednesday, before the report, futures posted triple-digit gains after some 4 consecutive days of closing losses. Now, most everyone, it seems, was anticipating USDA would trim cotton acres back a month ago, and most everyone knows old and new crop prices usually drop in the spring. Now, despite the fact it's going against history, analyst Darren Newsom is not quite ready to say it's impossible for cotton to still move higher.
We have to see, I think, more from both sides of the market. We have to see the spreads really start to react. We have to see the commercial traders saying, look, we're going to have a tight supply and demand situation further off in the 13-14 marketing year. Maybe we saw the early signs of it here late this week. It's going to have to try to build, but it's going to be going against history because this is the normal time of year when cotton, both old crop and new crop, tends to come down. So it's got some problems, but I think this report might have been the trigger to kind of help pull it higher.
Our trivia quiz this week deals with peanuts. What is the most commonly grown peanut variety in the United States? The answer is one of the following: runner peanuts, Spanish peanuts, Valencia peanuts, or Virginia peanuts. You'll find out the correct one before the new feature story that's coming up. We begin the livestock sector in poultry with the latest on that expanding bird flu crisis in China. 24 people have reportedly contracted what's officially known as H7N9. 7 deaths are now being reported. A variety of different news agencies report chicken is being pulled from menus, and calls to close live poultry markets in China are increasing. Schools in Shanghai have now been asked to stop offering chicken to students. Taiwan's China Airlines is allegedly beefing up sanitation and disinfection measures. Now, China's National Poultry Association says the bird flu outbreak is a devastating blow to the industry there. Moving now to the beef sector. Some analysts are very optimistic when it comes to the feeder cattle market. Some call the recent drop in value an elevator-style break that was a little too cheap too quick. Analyst Mark Gold is one of the many traders who believe cheaper corn could really be the catalyst for positive prices.
We've started to come back here now. I like the feeder cattle market. I think it looks okay in here. I don't see things have changed, and I think with the cheaper corn prices, cheaper meal prices, that meat market's going to pick up. I like the demand for meat, not only on the beef side, but on the pork side as well. People want to say that what's happening in China with this potential bird flu is going to affect it. To me, the Chinese are going to still eat, and can we see a pickup of exports? There's still the Payleen question, but I believe that demand's going to be there on both the beef and the pork.
Some numbers compiled by the U.S. Meat Export Federation reflecting activity back in February are positive for the cattle sector. U.S. beef exports in the second month of this year managed a 5% increase in value compared to a year ago, despite a slight decline in volume. Now, that drop in volume is being attributed to a combination of trade barriers and a sluggish economy in some foreign markets. Well, before our new feature story, let's stop by the trivia board for this week's answer. And the answer that is correct is A. The runner variety accounts for 80% of the U.S. peanut acreage. It's what most commonly used to make peanut butter.